Governor Walz's budget plan for the coming biennium includes some significant tax changes. I spoke with Commissioner of Revenue Robert Doty about the proposal. Last month, a report revealed that revenue collections in January were 14% higher than forecast. And the most crucial report, the February budget and economic forecast, is just around the corner. Generally speaking, to what degree might these new figures impact the governor's tax proposal?
Well, Shannon, thank you so much for having me. I really appreciate this. So let me, in my response to that, quite frankly, is that, it is great and very positive that tax collections are better than forecast. And but I think that the governor's attention right now is still on those families and those individuals that are still hurting right now from COVID-19 and the impacts of the pandemic. There are families right now that are truly, truly struggling. So, right now, I can't answer how that will impact what changes to the proposals there will be in the future here. We'll have to see what the forecast says, but I will tell you that the governor's focus is definitely still on those families that are truly hurting.
Well, and so let's get into the details here, because the governor's budget proposal is $52 billion two-year budget. He's called it the COVID-19 recovery budget, and it has some significant tax implications, especially to help those people most impacted by the COVID-19 pandemic. So can you walk us through the tax changes that would benefit those people the most?
Sure. So the first one that I'll walk through is the expansion of the first tier income tax bracket. And basically this is an expansion of the first tier of the income threshold that will become part of the first tier. So really what this does is that those taxpayers who have their last dollar of income in the second tier will actually see a reduction in their taxes, as more of their income is then taxed at the lower tax rate of 5.3% rather than the 6.8%. This proposal will affect more than 1 million taxpayers, and that decrease in tax will on average be about $36 per return. Now, I know for some people I've heard say, well, $36 isn't really that much. Well, again, my response continues to be to that two things. One is that for a lot of people right now, again, who are really hurting and struggling, $36 is meaningful. And I don't want to ever minimize that. And so that's really important. The second thing that's important with this is the fact that this proposal is part of an overall package of investments that truly will help those who, again, have been most impacted by the COVID-19 pandemic. And so this is just part of a bigger package.
Well, and another element of that then is the family tax credit for I think I said that right. The working family credit for lower income households, they would see a one-time payment. And also the angel tax credit is something that the governor is proposing. Who does that help?
So again, the working family credit will help lower and moderate income Minnesotans, and that proposal increases both the credit percentage as well as the phase out percentage for the working family credit by about 18%. And so Minnesotans will see an increase in that credit of about $160 starting in tax year 2021. So that's again, I have to say that's part of the overall package again. And then the angel tax credit, the governor's proposal puts about $7 million into that credit starting in tax year 2022. The angel tax credit is a refundable credit that provides incentives, if you will, for individual investors as well as investment funds to provide equity investments to startup businesses that are focused more on technology. And so currently the tax credit was kind of set to sunset at the end of 2021. So the governor's proposal extends that into 2022.
And so in order to pay for this, the governor has said that he's asking those who can to pay their fair share. That 0.7% of the highest income earners in Minnesota would see their taxes go up through the creation of a fifth tier. Now, currently the top tax bracket pays 10%. What would be the new percentage if this new tax tier is created, and about how many Minnesotans fall into this category?
Sure. So just to give you just a step back half a second, give me a little bit of a little bit of background. So we currently have our highest tax bracket right now is around 4%. Excuse me. Our highest tax bracket right now is our fourth tier, which is at 9.85%.
Okay, I think I meant almost 10.
Right, okay. And that impacts if you're married filing joint and your income is above 276,000, if you are head of household, it's 220,000, and if you are single, it's 166,000. The governor's proposal increases the fourth tier rate to 10.85% to create this new fifth tier. Okay, and so that would be for individuals making married filing jointly. Their income would be $1 million or greater, and if you're head of household, $750,000 or greater, or if you're single, $500,000 or greater. And I think so. To answer your question about the impact, so currently there's about 80,000 tax households that fall into our current fourth tier. Now remember the difference in those thresholds. So there's about 80,000 that fall into that fourth tier. When you add this fifth tier, and again, you're looking at, like you said, the top 0.7% of Minnesotans, and that's about 21,000 tax returns that would be paying this higher rate. And those taxpayers would see an increase of a little over $8,000 per return. I think the other thing that's really important to always kind of come back to is that 99.3% of Minnesotans would see no increase in their tax at all.
There's one more thing that I really want to get to before we run out of time, and that is the increase in taxes on the corporate franchise taxes, which would go from 9.8 to 11.25%. Yeah. Who are these businesses? Because critics say that they're going to leave the state or they're going to pass those costs on to their consumers. How do you defend that?
So, Shannon, obviously that's the discussion that's going on right now, right? And so a couple things. So first of all, it's important to note that this is for profitable C corporations. That's the first thing, and so that's really important. So and again, it is to acknowledge that C corporations come in large and small sizes. So I think that's important to note. Now, in terms of this whole notion of businesses leaving the state, I think the jury's really out on that. I mean, there's a lot of conflicting studies and information out there that says that some say a higher tax rate could potentially force businesses out of the state, and there's others that say it doesn't. I think a couple things that I would kind of fall back on. One is that in 2017, when the tax rate was increased to 9.8%, we haven't really seen a migration that resulted from that. So I think that's also really important. The other thing that's also important to note is that businesses or corporations will leave a state potentially for a lot of reasons, right? And the tax rate may just be one of those. Some of those may be other things related to the business climate, maybe the infrastructure issues. It may be issues with regard to finding eligible workers. I mean, there's a lot of reasons why a business could leave. And I think the other thing that I've also heard people talk about is the fact that that if you raise the corporate franchise rate, that corporations will simply just pass that right along to consumers. And I think that the other thing that we should remember with that is that that any kind of increase in the corporate franchise rate potentially is passed on to both consumers, workers, as well as shareholders. And then depending on the level of activity that a business has within Minnesota, also some of that is exported out state. So there's a lot of factors that go into that. And again,
I'm sorry, we are running out of time, and so I'm going to have to stop you there. But I want to thank you so much for taking the time, and we can go into this more another time.
All right, thank you.